Good morning. You're with Beyond the Sensex, the show that I'm being. Well, let me quickly, without any further words, quickly go across and welcome Harendra Kumar from Centrum, who joins us on the show to take us through the next half an hour. Harendra, morning, and thanks for joining us on Beyond the Sensex. Well, usually we'd start with some kind of a broad market chat, but let me first get your immediate views on the big numbers that we saw in the morning, if you've managed to go through them. Satyam and Wipro.
See, broadly, I think they've been encouraging, and more importantly, I think what we're looking at is, a better Q2, Q3, Q4 number. And if the rupee continues to stay the way it is, I'm sure, that could be a little encouraging for the markets. Importantly, I think good part is they're meeting the guidance, and they had guided that, the Q1 and Q2 are going to be, kind of moderate, and which is what we are seeing now. So I think overall things, with the valuations going down further, I think things are looking a little more encouraging on the IT front, and I think you should continue to have overweight stance there.
What would you do if you were already a shareholder in any of these companies? Or on the other hand, what would you do if you were looking at entering? Is this then the time to get in? Do you think they're about to turn the corner as far as the difficult period is concerned?
So I think probably another 6 more months, I think, before they reconfigure their business models to the evolving market dynamics in the US. But yes, I think they are some of the best managements in the country. They've gone through a similar challenging business cycle post 2000, and they've emerged stronger from there. So I'm sure that going forward they're going to do the same thing. Plus they have a lot of cash. They are much more stronger, and I think acquisition will be, like any business or a mature business environment, and acquisition is the way to grow. And I'm sure the management would be considering it aggressively. So I think that's where the trigger could be going forward.
Okay. So if you have to play the IT story, would it be safer to right now, even now, just stick to the frontliners? Or is there something within the mid-cap space that you could start looking at?
Actually you have to be a little selective there. Again, it's a play on the management and the product proposition that they have. The larger cap ones have emerged stronger, actually, going forward, and we've seen the market share also evolve similarly. So yes, large cap companies are stronger and better to weather this storm. But yes, selectively in the mid cap space as well, where you have a unique proposition, they've been beating down in terms of the broader market, and they are available at probably 7 times forward multiples, which is cheap in any context, be it IT or any other sector for that matter. So we have some plays like Tata Elxsi, Mastech, with high ROE, stable business model, de-risk geographies. So I think there are plays there as well. But yes, you've got to be very selective. They're not going to give explosive returns from here on, but yes, they'll buffer your portfolio and give you decent returns.
Okay, let me quickly go through the sectoral indices tally as far as what's moving in terms of direct KPI comments. Once again, the pain and pressure seems to be still showing up as far as the US business is concerned. So I guess it does give a sense that the next couple of quarters, as you said, 6 months, will be a wait and watch period.
Absolutely, and I think the second tier companies are going to face a lot more challenges because they don't have the products to go across geographies and give their proposition, and they're very concentrated. So that's where the challenges will be. So the larger plays remain preferred bet, and selective mid caps, where they have a stronger proposition.
Okay, let's quickly shift focus, Harendra, to some other action which is out there in the market. I'm just looking at the real estate index, which is actually the second highest gainer in today's market action as well, and it was moving up even yesterday. Will you call it a false pullback or a technical pullback? How is this space looking, real estate?
See, it is a pullback. If you look at it, actually the environment across the country is a little sobered down. Projects are getting delayed. Funding is a challenge from whatever we are speaking to the real estate players, and we're early into the cycle at this point of time. So I don't think the environment is going to change probably for the next 6 to 8 months, and the market is unlikely to price an improvement in the operating metrics of all these companies. So I think it's a trader's market as far as the realty is concerned for the next 6 to 7 months, and it's only when the interest rates soften and yields or rentals crash are we going to look at a revival in this market. So I think it's for the next 8 months it is for the traders only.
Okay, fair enough. Let's take a quick break, but still looking quite okay on the markets. IT continues to suffer. The index has been knocked out of shape, 4% down, but it's the banking pack which is leading the charge, 5% up on the BankX right now. Does it make sense at this point in time, considering the fact that yes, banks had also been oversold, as a lot of people called it at the time? But what are you making of the banking pack? We've just seen 2 numbers, Axis and HDFC so far. What are the expectations?
See, banking sector, we've tried to look into history, and what we've seen is that net interest margins typically do compress in challenging environments, but they don't fall below 2. And valuations are typically for private banks in the range of 2 times price to adjusted book value, which most private banks are today at that point of time. You know, and PSU banks, the lowest that SBI has gone is around 0.8 times price to adjusted book value, and that's where we are at this point of time. So I think market has priced in significant deceleration, or knocking off a lot of M2M losses, as well as write-offs in the retail portfolio. So I think private banks are gaining market share, and if they are available cheaply, you'll see a short-term suppression because of the retail write-offs, but they're available at a good value because they have strong franchises, and I think the India consumption story is not over. So when interest rate turns, typically they'll move up. So I think this is a contrarian at this point of time. The results have to be watched. If they're a little better than what market expects, I'm sure that we could see some amount of a bounce back.
If you were to pick and choose and make a call between the private bank space and the PSU bank space, what would you place your bets with?
See, again, it has to be very selectively. Banks with higher CASA, probably an Axis Bank or an HDFC Bank, could be relatively safer in this environment. And in the PSU banks, probably some of the south-based banks who are relatively conservative and who have shown steady growth with lower NPAs and are trading at attractive valuations.
Okay, all right. So that's a quick word on the banking space. Well, as far as the indices go, we are now looking at a triple-digit gain on the Sensex. It's about a 103-point up rally. It's 0.7% up, but overall, it's still quite tepid. We aren't going anywhere too far in terms of the sectoral players. We pointed out Power Auto is also on the up move. Quick last question to you, Harendra, before we wind up. Whatever happens on July 22nd, what and how much has the market factored in, if anything at all? What is the market prepared for, if it is?
See, clearly if the government falls, there's again a period of uncertainty. We don't move ahead in terms of reforms, because people are hoping that if it wins the conference, there'll be some quick reform initiatives by the government. So that will get halted. But good part for the market is, whenever elections have been announced or a new government has been formed, irrespective of who forms it, the markets have hit a bottom. And from there, the rallies have started. So I'm sure, I think probably in a year's time, we have a new government. At least we know when the market bottom is.
Let's see if that's the trigger that the market has been waiting for all along. Well, with that, we're out of time on Beyond the Sensex for today. Thanks very much for watching. We'll be back same time, same place on Monday. Till then, keep watching UTVi. All the news and updates up next on News at Noon.